Hi there, it's Bill with smarttrades.com. Today is Friday, February the 3rd. It's 11:45 a.m. Pacific time, and I've posted free samples of my newsletter at my website right on the homepage at smarttrades.com. They'll be up for a limited time. So if you'd like to check out what I do on a day-to-day and somewhat intraday basis, please go to smarttrades.com for a couple of free newsletters right on top of the homepage. At any rate, as you folks may or may not remember, we were looking at the euro in the last report, and one of my concerns for the stock market was that the the euro FX would have a rally, and that would push the S&P through the 1310 area. I also was concerned that I was starting to get a lot of folks were starting to look for a top in the S&P around that 1300, 1310 area. At any rate, here is the count. I believe that was posted around the middle of January in my last video. And here's the shorter term daily on that. I had talked about negating the count below 125, basis the euro. And here's how it's worked out so far. Again, the ABC 5-wave pattern to the downside with a rather ugly looking wave 4 that tops around 132. That's important because previous 4th wave resistance so far around 132 or just above it is holding the market in check. That is also approximately the bottom of wave 1 and the bottom of A. So the area around 132, perhaps a little bit above it, an important area for the euro to get through if indeed this is an ABC decline and we have an important low in place. Here's the Dow, and here is the ever popular 1, 2, 3, 4, 5 wave 1 to the downside. The super bears are counting it that way at least. Several problems with that. Again, we have a 5-wave structure that actually terminates below the peak, and otherwise you wind up with an odd count in terms you have basically a 7-wave count, which would be corrective to that peak at 12,876. Elliott wave 101 states that wave 2 cannot take out the beginning of wave 1. Well, the Dow is indeed knocking on that door. That high, I believe that's back in May, is 12,876. Today we got up to 12,869.95, so we're about 6 or 7 points shy of that high in the Dow right now. The S&P is lower, and that's the count. Folks are looking at the S&P if they're a bear because it gives them a little bit more hope. I prefer to look at the worst case scenario and then see if my count holds up. Anyway, here is my long-standing preferred count, and in that count you've got 5 waves up to A, a rather oddball looking ABC down. Just about 2.62 of A is the termination of the C wave. I haven't labeled it here. I apologize for that. And from there, an ABC that could take us, and perhaps probably will take us, to new highs in the Dow and also in the Nasdaq. And indeed, here is the Nasdaq. The Nasdaq has already gone to new highs. We're already up at approximately the A equals C. The Nasdaq does count a little differently, and I'm using a possible scenario here that this is a triangle. If you count A up to about the 2400 level, you're actually going to have possibly a different target. I'll look at that perhaps in the next report and in my newsletter. That said, we're up into resistance right now in the Nasdaq. I had a target of around 2520. It was slightly exceeded today. Nonetheless, we're in that zone, and it's worth noting again that the Nasdaq has made new highs, and that negates this as a wave 1 down in the Nasdaq. Dow is likely going to negate it too. Here's that count in the S&P. Again, the 5 waves up, the ABC down, and if we have an A equals C rally off of the low here below 1100, that's going to take us back above the 1372 high with an A equals C, perhaps up around 1375 or so. It doesn't have to get there, but I think that when you look at the Dow and the Nasdaq and all the information, it's much more likely that this rally back up is not a 2, but rather a B wave. Shorter term view of the S&P. This is something I noted in my newsletter a few days back, that we had obviously broken above the 1292 level, which is an important breakout in and of itself. And you'll notice we had about a 4-day consolidation just below that 1285, 1290 area, and then a 4-day consolidation just above it, that area around 1285 up to around 1292. Now it becomes very important in terms of support for this market if it's going higher, or a place that it needs to break down under if we're peaking. So an interesting and important area to watch around 1285, 1295 to give it a little bit more room. And here's a count I've put on my newsletter for the last several days, and basically counting the rally from the late November, early December bottom as a 5-wave structure. I'm not certain this is the count. It's certainly one option. Again, here is that important area around the 1292 area. Should offer support, shouldn't go below there if indeed we are still working on our fourth wave. It's possible this is too short to be a fourth wave that matches up with this wave 2 decline. The bottom line is, though, that this count projects up again above 1370 or so, certainly at least getting close to 1370 on the S&P. Long-term count on the S&P, I've posted this before. Again, the idea that this is a huge sideways type bear market, very similar to the 70s, and that our rally off the 2009 low is A. We are working on a B wave that could take us back down towards that 2009 low. Probably it's going to be higher than that. The first target is around S&P 1000. If indeed we do top off up around the 1370 level on this current rally. Here's a short-term chart. Even on the shorter-term scenario, you'll notice that a 1 = 5 comes in around that 1370 level. If we take some time to get there, the channel is going to be up in that area as well. You'll remember in the last report I had looked at possible topping scenarios here, and indeed in my newsletter I did update that because we went through the 1325 area. The declines off of these tests of the upper trend line all turned out to be corrective. In real time on my newsletter, I updated these and showed these declines as probably being corrective, although obviously we did look at the possibility that we had a peak there just above the 1310 level. I try not to fall in love with my counts. I want to be critical and open-minded, and not trying to prove the count correct, rather let the market tell me what's correct. And that's indeed what's happening here. Again, 1365, 1370 area is the probable target based on an hourly or 130-minute count. You'll remember this count from the gold chart. This was first posted back in actually the middle of December or so, showing a target of around 1540 for gold. We bottomed a bit below there. We've rallied since then. I think that report, by this chart, by the way, was from the last report in mid-January, and we've rallied from there. This is from my intraday and daily newsletter, and we had noted that there's a bit of a wedge forming. We may have a series of 1-2s, and this could be a 3-4 type pattern. If it is, and we've broken down today off of the top of that wedge, the 1720 area is going to be first support. If we start to overlap these congestions down here, these 1-2s, if you will, down around the 1670 area or so, that would probably indicate that it's not a series of 1-2s. Doesn't necessarily negate the potential for further rally, but it certainly negates the idea that this is a third wave up, which I'm not certain it is anyway. Anyway, long story short, gold's probably ready for a correction here. 1700, 1720 is the area to watch for first support, and then watch for overlaps of these peaks that we made off of the low on that test of the 1540 support. Anyway, thank you very much for watching. Again, go to smarttrades.com for a couple of free recent newsletters. They won't be up there for more than a week or so, so get them while you can. And thank you so much for watching. If you do like the newsletters, and please like us on Facebook. Additionally, if you like these videos, please click the like button here on YouTube. And hope you have a great weekend. Thank you so much for watching. Bye-bye.